Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekhar Kongari, Equity Research Analyst. The disclaimer for this podcast is that whatever stocks we discuss are intended only for educational purpose, should not be taken as an investment advice. Let's look into Nifty's daily chart to get an overview of the general market, and we'll also give an perspective from O'Neill lens. Nifty has made a new high recently, that is 18,887 level. There is some pullback which happened after that. There is some profit booking happening across major large cap stocks. That is the reason Nifty retraced back towards its 21 DMA, and in the last week it closed below its 21 DMA as well. If the sell-off continues and the Nifty comes back to its 50 DMA, definitely we might expect some breakdowns happening in major companies, and that might bring more selling pressure into the market. However, we might expect Nifty to bounce back from its 50 DMA as well, because 50 DMA has been a very strong support for the Nifty along with its 100 DMA, which is another 100-200 points below its 50 DMA. So around these levels, we might expect some support for the Nifty. Coming to the O'Neill's view, we are in confirmed uptrend, and we have been adding stocks to model portfolio as well, which are giving strong buy points. One more point is that even though the Nifty is trading at its all-time highs, but the broader indices, Nifty mid cap and Nifty small cap especially, are still trading below their all-time highs. Some 10 to 15% more rally is needed in those indices to back to ATH in these indices. So whenever the broader market joins the rally, we expect more breakouts to happen, and the probability of success in these breakouts will also be higher when the broader market joins the rally. And as we are in confirmed uptrend, it is very important to track weakness in the market as well. Distribution days help us in tracking weakness in the market. Distribution day count is at 3. There is some slight cautiousness which has increased last week because the market reached its 21 DMA. If the Nifty adds 1 or 2 distribution days more and it breaches its 50 DMA, we will be changing the market status to uptrend under pressure. In such a scenario, our aggressive nature while adding stocks will come down, and we try to book out the profits in stocks rather than taking fresh positions. Some of the stocks which are in news and which will be in the radar during the market session today are IGL has hiked its CNG prices to 70, almost 80 rupees per kg in Delhi. So we might expect some volatile moves happening in those in IGL script, and MGL also we can expect similar action. SunPharma has received a warning letter from US FDA. This is related to its Halol facility. The US FDA felt that there is some not so good manufacturing practices which are happening at the plant, so they have issued a warning letter. So we might expect some reply to this letter by the SunPharma as well. Accenture, a major IT company, has reported its Q1 numbers. The revenue has grown 15% year-on-year basis to $15.75 billion. This is in constant currency terms, whereas it has increased 5% in the dollar terms. The key parameter which we look in IT results is the growth forecast they are expecting. For the FY23, the revenue growth forecast has kept unchanged at 8 to 11% in the constant currency terms. So it is a positive sign for the IT companies. So Indian IT companies also might react positively to this news, because there is no major reduction in the growth forecast. Also, the margin forecast also kept unchanged at 15.3 to 15.5% in the range for the FY23. So no major action there also on the margin and revenue front. Both are kept unchanged, which is a good sign. Dilip Buildcon has received an order worth 1,647 crores from NHAI, that is National Highways Authorities of India, for a project related to four laning of the section in Karimnagar Warangal section of NH 563 road. So this is a good sign for good for positive for the company Dilip Buildcon. Talking about institutional activity yesterday, foreign institutional investors have sold nearly yesterday means on Friday they have sold more than 1975 crores of equities, whereas domestic institutional investors have bought 1540 crores of equities. Domestic investors are coming in when the FIS are going out, so which is a positive sign. Indian retail and domestics are able to give support to the market. That is the reason. Nifty is not so off highs when compared to other markets which are trading clearly 5 to 10% or 20% below their all-time highs. So in that sense, we are still resilient because of the power we domestic investors have gained recently. Overnight, that is Friday night, US market closed pretty deep, almost 1% lower across the indices, Dow Jones, S&P, Nasdaq. Asian markets are also taking the weak negative global cues from the US market. They are also trading in deep red. Shanghai 1.3% lower, Nikkei 1.1% lower. Kospi is relatively better when compared to other indices, which is also trading 0.4% lower. Brent crude is trading at $80 per barrel, a positive sign for the Indian macroeconomic front. RBI is still expecting an average crude basket around $100 per barrel. So, as long as the Brent crude stays below 100 or 80, 90 levels, it's a positive sign on the our macroeconomic front. Our finances will get positively impacted because we are a major importer of crude oil. So as long as the price stays lower, our rupee will also strengthen because of a lower expense in dollar terms. US versus rupee is trading at 82.7 rupees per dollar. We would want the rupee to appreciate here. Not only rupee, major currencies across the globe are depreciating across the US dollar. So that is happening globally. It's not specific to Indian market. SGX Nifty is indicating opening near 18,300 level. So as long as that level is held on, and we if the Nifty finds support, we might expect a good buying happening in the Nifty, and Nifty reclaiming its 21 DMA is a very positive sign in the today's session. If that happens, then definitely market structure will improve, and if the broader market indices also joins the rally, definitely very good week we might expect going forward. For the chart of the day, we picked RK Forgings, Ramkrishna Forgings. Recently, the stock has broken out on very strong volume. You can see the price and the strong action, price and volume action is very strong. Definitely a positive breakout. But the last session on Friday, the stock retraced back towards its ideal buy zone. So whoever has missed buying opportunity can look for this stock to start initiating few positions in the stock. One can also follow pyramid approach while taking positions in this stock. Coming to ratings, the stock has a very good ratings. You can see EPS is at 75. Technical ratings such as RS rating is at 79, and also RS line is improving, trending higher. The RS line has also hit blue dots. Again, a positive sign on the technical front. We can see the fundamental character of the stock. The company has been reporting very good set of numbers both on EPS and sales front. EPS has been growing in triple digits for the last 6 to 7, 8 quarters. Sales on also higher double to triple digits, which is a very good growth generator, positive sign on momentum strategies as well. So overall, both the techno and fundamentally, the stock is looking very good. If the stock is good, technical buy point, then one can initiate the positions looking at the risk reward ratio as well, because the 21 DMA is very far from the current market price. So if there is any sell-off happening in the market, this stock might test its 21 and 50 DMAs because the stock has good support at these levels. So one can expect a 7 to 8% stop loss being hit very easily as well, because the trading range is also very high. The stock has been rallying 4 to 5% in a day. So 4 to 5% loss can also happen. The movement can be on either side. So please be watchful on that front as well. Thanks for joining today's pre-bell. Have a very good